How many reserve currencies survived losing a world war? 0. But here's what should terrify you. You don't need a world war to lose reserve currency status. Britain won 2 world wars and still lost everything. The pound went from financing 60% of global trade to a regional currency nobody outside Europe cares about. The sequence that killed it is playing out again right now with the dollar. And this time, the fall could be faster and harder. This video is about one idea. Reserve currencies don't die from a single catastrophic event. They die from a predictable sequence that starts with war debt, continues through failed attempts to maintain appearances, and ends with a forced reset nobody sees coming. The British pound took 35 years to go from global dominance to irrelevance. The dollar is moving through the same sequence, but the world moves faster now. What took Britain 3 decades might take us less than 10 years. I'm the debt archivist. My job is to dig through old files to find patterns your news never explains. Today we're opening the file on the British pound collapse, specifically 1914 to 1949. This isn't ancient history. This is the blueprint. When you see how Britain's reserve currency died, you'll recognize every stage playing out in America right now. In 1914, Britain was the undisputed financial superpower. The pound sterling was the currency everyone wanted. More than 60% of global trade was financed in sterling. The City of London was the financial capital of the planet. The pound was backed by gold and held in central bank reserves worldwide. If you'd asked anyone which currency would dominate in 50 years, the answer was obvious. The pound. It seemed untouchable. Then came World War I. Britain entered believing it would be over by Christmas. It lasted 4 years. In 1914, Britain's national debt was £706 million, 25% of GDP. By 1919, debt had exploded to £7.48 billion, over 130% of GDP. They'd borrowed more than 10 times their original debt in 5 years. Here's what people miss. Britain wasn't just funding their own war, they funded everyone's war. They provided credit to France, Russia, Italy, other allies. They borrowed from their citizens, banks, and increasingly from the United States. Their strategy was to outlast Germany financially. It worked, Germany collapsed. But by 1918, interest payments consumed 40% of government spending. 4 out of every £10 collected in taxes went straight to debt service. Britain won the war but shackled itself to a debt burden that would drain resources for a generation. In 1925, Britain made a catastrophic decision. They returned to the gold standard at the pre-war exchange rate. Chancellor Winston Churchill wanted the pound at $4.86, signaling Britain was still strong. The pound was overvalued. British exports became too expensive. Unemployment rose. The economy stagnated. But admitting the policy failed meant admitting Britain was no longer the superpower it once was. So they kept pretending for 6 years. Then 1931 arrived. The Great Depression hit. Unemployment soared above 10%. Tax revenues collapsed. The crisis in Austria and Germany triggered panic. Central banks in France and the United States began converting sterling reserves to gold. Within weeks, the Bank of England lost more than £50 million in reserves, the equivalent of 6 weeks of exports. On September 21, 1931, Britain abandoned the gold standard. The pound fell from $4.86 to $3.69. A 25% devaluation overnight. The global reserve currency admitted it couldn't keep its promises. Countries that pegged to sterling panicked. The sterling bloc formed, but it was a block of weakness. Nations stayed with sterling not from trust, but from lack of better options. Britain didn't choose to devalue, they were forced to. Politicians had insisted for years the pound was rock solid. Then in weeks, the facade collapsed. When you cling to an overvalued currency to maintain prestige, the market eventually calls your bluff. When it does, the collapse is sudden and brutal. After 1931, the pound never recovered dominance. The dollar's share of reserves began rising. By the mid-30s, the dollar had overtaken sterling as the leading currency for international bonds. Then World War II cost Britain everything. They added another £120 billion in debt. By 1945, they owed more than their entire economic output, mostly to the United States. In 1949, Britain devalued again. The pound fell from $4.03 to $2.80, over 30%. This was supposed to boost exports. It didn't work. The pound's share of global reserves fell from 81% in 1945 to 58% by 1950, 35% by 1960, 11% by 1970. In 25 years, the pound went from dominating global finance to irrelevance. What killed the pound wasn't one crisis, it was a sequence: massive war debt, an overvalued currency maintained for prestige, forced devaluation when reality couldn't be denied, another war, more debt, another devaluation, and slow recognition by the world that sterling wasn't worth holding anymore. Let's compare Britain's collapse to America's current situation. Military overextension. Britain had commitments on 6 continents. When war broke out, they couldn't just defend Britain, they had to defend the entire empire. Defense spending hit 40% of GDP by 1915. They couldn't afford it, but couldn't admit they were overextended. Today, the United States operates over 750 bases in 80 countries with troops in 150 nations. We're committed to defending Europe, Japan, South Korea, fighting in the Middle East, countering China and Russia. Our military budget is $850 billion annually, more than the next 10 countries combined. If China moves on Taiwan, Russia escalates in Europe, and Iran closes the Strait of Hormuz simultaneously, we cannot respond to everything. We're overextended just like Britain. We haven't admitted it yet. Debt spirals. Britain's debt went from 25% to 130% of GDP during World War I. They never recovered. Interest payments consumed 40% of the budget and never came down. The debt became a permanent drain. U.S. debt today stands at $38 trillion, 123% of GDP, higher than Britain's debt after World War I. In fiscal year 2025, the deficit was $1.8 trillion. We spent $7 trillion and collected $5.2 trillion. Interest payments are nearly $1 trillion annually, more than defense spending. Interest is the fastest growing budget item. Currency debasement. Britain tried maintaining the pound's value at the pre-war rate despite being overvalued. They defended that peg for 6 years, draining reserves and crushing their economy. Then they couldn't hold it. The pound collapsed 25% overnight. The United States went off gold completely in 1971. The dollar is pure fiat, backed only by trust. We've printed relentlessly. The money supply increased 400% since 2000. We printed $6 trillion between 2020 and 2022 alone. We're not mixing copper into silver coins. We're creating unlimited paper. Just like Britain's overvalued pound couldn't be defended forever, the dollar's purchasing power can't be maintained if we keep creating more. Loss of productive capacity. Britain's economy stagnated after World War I because they stopped producing things. Manufacturing declined. They became dependent on imports. When gold ran out and borrowing hit limits, the system collapsed. America doesn't make things anymore. Our manufacturing base has been gutted. We import $800 billion more than we export annually. We're dependent on foreign supply chains for everything: medicine, electronics, steel, military components. Just like Britain became a conduit for wealth rather than creator of it, we've become a country that consumes other people's production. Reserve currency erosion. Britain's pound went from 60% of global reserves to 11% by 1970. It happened gradually as countries shifted to dollars and other currencies. Each crisis made sterling less trustworthy. The dollar's share was 72% in 2001. Today it's 58%. We've lost 14 percentage points in 24 years. In the first quarter of 2025, the share dropped to 57.8%. Central banks are diversifying, buying gold, holding euros, yen, yuan. They're reducing dollar exposure because they see the same risks: massive debt, persistent deficits, currency creation, geopolitical instability. Britain's experience teaches us you can't maintain reserve status through willpower alone. You need fiscal discipline, productive capacity, and trust. that your currency holds value. Britain lost all three. The United States is losing all three right now. Strip away details and reserve currency collapse follows a clear pattern. Britain went through it, we're going through it now. Stage 1, massive crisis spending. For Britain, World War I. Debt exploded from 25% to 130% of GDP in 5 years. They convinced themselves it was temporary. It wasn't. For the United States, multiple crises, 2008 financial crisis, COVID-19, decades of deficits. Each added trillions. We told ourselves emergency spending was temporary. The debt only goes up. Stage 2, attempt to maintain appearances. Britain returned to gold in 1925 to signal strength. They defended the overvalued pound for 6 years because admitting weakness was unthinkable. The United States maintains appearances by insisting the dollar is undisputed, debt is manageable, deficits don't matter. Every authority assures us America's financial position is strong, but so did Britain in 1926. Stage 3. First cracks appear. For Britain, slow gold drain starting late 20s. Other countries questioned whether Britain could defend the pound. France and the United States converted sterling to gold. For America, cracks show in reserve data. Dollar share dropped from 72 to 58%. Central banks buy gold at record rates. China reduced treasury holdings 45% since 2013. BRICS develop alternative payment systems, small, persistent erosions of confidence. Stage 4, authorities doubled down. Britain refused to devalue even as unemployment hit 10%, exports collapsed, industries failed. They insisted the pound must be defended. The United States is doubling down now. We run $2 trillion deficits during peacetime. We print money to cover gaps. We sanction countries and weaponize the dollar, accelerating others' desire to find alternatives. We can't stop because stopping means admitting the system is unsustainable. Stage 5. Forced crisis. In September 1931, Britain ran out of options. The gold drain accelerated, investors panicked, the bank lost £50 million in weeks. On September 21st, they abandoned gold. The pound fell 25% overnight. This wasn't policy choice. It was forced capitulation. The United States hasn't hit stage 5 yet, but we can see what it looks like. A moment when foreign dollar holders want out. Once the rush for exit starts, it feeds on itself. When it happens, it'll happen fast. Stage 6. Devaluation and reset. Britain devalued twice, 1931 and 1949. Each time they told themselves it would solve problems. It didn't. Each devaluation eroded confidence further. The pound's reserve share kept falling. For America, stage 6 could be explicit devaluation or implicit through inflation. Either way, the dollar's purchasing power declines sharply. Once it starts, it's hard to stop because everyone exits simultaneously. Stage 7. Permanent loss of status. By 1970, the pound was regional. Nobody outside the Commonwealth cared. Britain went from financing 60% of world trade to irrelevance. It happened gradually but permanently. There was no path back. For the United States, stage 7 is the world after dollar dominance, where the dollar is just another currency we can't borrow cheaply, can't print our way out, face the same constraints every country faces. That's the end game Britain reached. We're between stage 4 and 5, we're doubling down, running massive deficits, maintaining appearances. Cracks are visible, but not catastrophic yet. For Britain, 6 years passed between return to gold and collapse. How long do we have? What makes this pattern predictable isn't just economics, it's psychology. Decision-makers in Britain then and America now face identical incentives, fears, and biases. Politicians operate on election cycles. A British MP in 1925 wasn't thinking about 1931. He thought about the next election. Devaluing would be admitting failure, politically toxic. Better maintain the peg, hope for recovery. Let someone else deal with consequences. This is why politicians always defend overvalued currencies longer than economics justify. Political cost of admitting weakness is immediate. Economic cost of continuing is delayed. American politicians face exact same incentives. No member of Congress wants to cut spending or raise taxes. Both are painful now. Consequences of not doing them, higher debt and eventual currency crisis, are problems for future Congresses. We keep running deficits because political pain of fiscal discipline is immediate and economic pain of irresponsibility is delayed. Central bankers face an impossible task: maintain currency stability without fiscal backing. The Bank of England in 1931 had to defend the pound with dwindling gold while government ran deficits and refused spending cuts. Eventually, reserves ran out. The bank couldn't defend anymore. But they can't admit that in advance because admission triggers the panic they're preventing. The Federal Reserve faces the same contradiction: maintain confidence in the dollar while Treasury runs $2 trillion deficits. Claim inflation is controlled while government prints trillions. Project strength while knowing debt is unsustainable. They can't admit this publicly because doing so triggers crisis. The public wants to believe everything is fine. British citizens in the 1920s wanted to believe Britain was still the empire where the sun never set. It's easier to believe in continued dominance than accept decline. Americans today want to believe the dollar will always be reserve currency, that Treasury bonds will always sell, that we can keep borrowing without consequences. Every authority reinforces this belief, but Britain thought they were exceptional too. They were wrong. Here's the trap. By the time everyone admits there's a problem, it's too late to fix gradually. If the Bank of England had admitted in 1926 the pound was overvalued and devalued voluntarily, damage would have been manageable. But they couldn't because admitting weakness triggers the crisis you're avoiding. So they waited until forced in 1931, and the damage was catastrophic. The Fed and Treasury are in the same trap. If they admitted today U.S. debt is unsustainable and dollar reserve status is eroding, they'd trigger panic. So they maintain confidence until the system breaks. And when it breaks, it'll break suddenly, because everyone pretending everything is fine will simultaneously realize it's not. Let's examine specific numbers connecting Britain's collapse to America's situation. The dollar's share of global reserves hit 57.8% in first quarter 2025, lowest in 3 decades. In 2001, the dollar was 72%. We've lost 14 points in 24 years. If this pace continues, we drop below 50% in less than 10 years. Where's the money going? Some to euro, now 20%. Some to yen, pound, yuan, but much goes to gold. Central banks buy gold at record rates. China, Russia, Turkey, India all adding gold. Why? Gold can't be printed, sanctioned, or devalued by foreign governments. Central banks buying gold at these rates tells you they see these risks. U.S. debt crossed $38 trillion in October 2025, 123% of GDP, higher than Britain after World War I. Debt increased $2.2 trillion in fiscal year 2025 alone. We add $1 trillion every few months. Interest payments hit $970 billion. Nearly $1 trillion just servicing existing debt. More than defense, more than Medicare. Interest is third largest budget item, growing faster than anything. Interest payments are mandatory spending. We can't vote to reduce them. They're determined by debt amount and interest rate, both numbers rising. Congressional Budget Office projects $13.8 trillion in interest over the next decade. Money that can't be spent on infrastructure, defense, education. Just gone, paid to bondholders. Federal government spent $7 trillion in fiscal year 2025, collected $5.2 trillion. $1.8 trillion gap. We spend $1.35 for every dollar collected. During peacetime, with unemployment below 4%, economy growing. This isn't emergency spending. This is structural. Military spending is $850 billion annually, and we're stretched thin. We can't defend all commitments if tested simultaneously. Manufacturing base hollowed out. We import critical goods from potential adversaries. Supply chains fragile. Same vulnerabilities Britain had. The signs are all there. Declining reserve share, exploding debt, massive deficits, rising interest costs, military overextension, loss of manufacturing. These aren't hypothetical risks. They're current conditions flashing the same warning Britain ignored. The system is unsustainable and will break. You can't control U.S. fiscal policy, but understanding this pattern gives you clarity. First, stop blindly trusting any currency is untouchable. The pound was global reserve for a century. Everyone believed it was permanent. It wasn't. The dollar has been dominant 80 years. Everyone believes it's permanent. It won't be. Currencies backed by nothing but trust only last while trust holds. Second, read news differently. When you hear the deficit is $2 trillion but fine because the economy grows, that's what British politicians said in the 20s. When you hear dollar dominance is secure because everyone uses dollars, that's what they said about the pound in 1930. When you hear debt doesn't matter because we print reserve currency, that's exactly the logic leading to collapse. Third, recognize the stage we're in. Not at panic stage yet. At the doubling down stage where authorities insist everything is fine while foundation cracks beneath. Britain stayed here from 1925 to 1931, 6 years before collapse. The pattern says, not forever. Fourth, understand why things happen. Why central banks buy gold? They see risks. Why dollar reserve share declining? Countries slowly hedging. Why BRICS developing alternatives? They want options when dollar system becomes unreliable. Rational responses to visible risks. Finally, stop thinking if and start thinking when. The question isn't whether the dollar loses reserve status. It's when and how fast. Britain's pound took 3 decades. The dollar might take less because everything moves faster now. If confidence breaks, the rush for exits will be faster and more chaotic than Britain experienced. This doesn't mean panic. It means prepare mentally. Understand the world with dollar dominance is temporary. The advantages we enjoy, cheap borrowing, ability to run deficits without immediate consequences, the exorbitant privilege of printing global reserve currency. Those advantages will end. When they do, America faces the same fiscal constraints every country faces. The adjustment will be painful. But Britain survived losing. Reserve status, they're still prosperous. Life went on. The adjustment was painful but not apocalyptic. The same for the United States. Losing reserve status isn't the end of the world. It's the end of specific financial privilege. Understanding the pattern helps you see it coming instead of being blindsided. The archive doesn't predict the future. It shows you the sequence we're already in. Britain lost reserve status through predictable pattern, massive war debt, attempts to maintain overvalued currency, gradual erosion of confidence, forced devaluation, permanent loss of dominance. The process took 35 years and ended with the pound becoming regional currency. The United States follows the same pattern: massive debt, persistent deficits, declining reserve share, military overextension, loss of productive capacity. We're in the middle of the sequence, not at panic stage, but well past where easy fixes exist. Why 2025 could be worse than the pound collapse. Britain had time. The world moved slowly in early 20th century. Information traveled by telegraph and ship. Capital flows were restricted. Britain had years between crises. We won't have that luxury. Information spreads instantly. Capital moves at light speed. If confidence in the dollar breaks, the cascade will be faster and more chaotic than anything Britain experienced. What took them 3 decades might take us 3 years. Or less? That's not prediction. It's recognition of how much faster systems move now. You can't stop what's coming, but you can see it clearly. You can recognize our stage. You can understand why central banks buy gold, why dollar share declines, why countries build alternatives. And you can prepare for a world where the dollar is just another currency, not the currency. If you want more calm, clear breakdowns of how debt, empires, and currencies really behave, subscribe to the Debt Archives. We open files your news ignores and show you patterns that repeat. The past doesn't repeat, but it sure rhymes. And right now, it's rhyming with 1931 Britain. Let's make sure you can hear it.